Last clip of the day is from the three amigos, Taylor, Rooster, and Drago.
We got Jim from Florida asking, can you break down what's driving Hedgeye's -2% plus April US GDP print versus the Wall Street consensus of 0.3%?
So that is in relation to the quarter-over-quarter SAR figure. We typically work on the year-over-year on a year-over-year basis, and so our estimate as of this week is about 74 bips, and that's in relation to consensus of 1.4%, and Atlanta Fed, which I think is at 1.5 or 1.6%. The difference there is obviously much more muted, and the quarter-over-quarter and the year-over-year numbers, as far as consensus are concerned, they don't reconcile because they're two separate sets of estimates. So I would kind of disregard that somewhat. What is driving our estimate? Well, you know, our NowCast model is driving that estimate. We use a nonlinear interpolation method where we look at a 30-factor NowCast, a set of NowCast factors, and in relation to the prior quarter, based on where those are trending, you know, that basically generates our rate of change signal, or the sign of the rate of change, and that's primarily what we're concerned with. We're running a rate of change centric model here, and we try our best to, you know, have our point estimates be in the neighborhood of right, but we're focused on getting the sign of the rate of change right, and right now that's pointing in the direction of quad 4. However, we are obviously dynamically updating and retraining that model. So, you know, if that changes, that'll be reflected in our estimate.
This next one, Drago, you touched on a little bit more, but we got another follow-up question, kind of wanting to dive a little bit into it. Is David is asking, the Atlanta Fed recently had a large increase in their Q1 GDP now estimate. Latest estimate is at 2.1%. Are we seeing the same? What's the difference in the math models? And I know you just kind of touched on it, but just want to go back to it.
Are you saying, are we seeing the same kind of upward kind of revising pressure on our estimate as the Atlanta Fed is seeing in theirs?
That's what I think the question's implying, yeah.
Okay. Not as of yet. You know, the Atlanta Fed estimate moves around a lot, and it's particularly volatile, you know, early in the quarter. And so we'll see where that moves. And, you know, it's been a light data week this week. Next week, there's a lot more domestic macro data coming in. And so we'll see how that factors into our NowCast.
Yeah, so some great commentary by Drago and the guys there. They're doing such a good job and stepping in on the macro show. I love kind of hearing those three guys from the macro team. And so just to expand on Drago's commentary about the data being a little bit light this week versus next, I kind of want to just lean into that a little bit and tie that into a bit of weekend work as well. So in terms of data next week, I think, or we would recommend that the focus should be a bit more on growth versus the inflation. At this point in time, growth and declining sort of the GDP number in terms of the GIP model, the growth component is of more of a focus for us than inflation. You know, inflation, and so in that regards, I think next week the industrial production and retail sales numbers are probably, you know, ones to definitely be highlighting next week and be kind of taking a look at. Now, with that said, the market and chatter around is still revolving around inflation. I mean, it's all pretty much anybody can talk about on old wall media, and it's all over, you know, FinTwit, et cetera, et cetera. So inflation is still a hot topic, or sort of a key subject matter for much of kind of the old wall, and therefore you do need to, you know, be mindful of that and be conscientious as to what the market may do in terms of a price action standpoint leading into that inflation print, and whether it's prints a dovish or hawkish number. So just again, like, be conscientious about that. But in terms of kind of recession risk rising, the growth piece is really the piece that certainly I'll be focusing more on, and I believe, considering I spoke to Richie this morning, the macro team is kind of focusing on that portion of the equation a bit more. So with that, I think just to reiterate, we've got industrial production, January industrial production on Wednesday, retail sales on Wednesday, jobless claims on Thursday, capacity utilization on Wednesday, NFIB small business index is released on Tuesday, and the business inventories is released on Wednesday. So those are all part of the NowCast model in various fashions, and all reflect or impact the growth piece of that NowCast model. On the inflation side, we've got the U.S. CPI prints on Tuesday, and the PPI print on Thursday for the U.S. So those are the two inflation pieces. So Tuesday, Thursday on the inflation side, and a combination of kind of Tuesday, Wednesday, Thursday on the growth side for those pieces of the puzzle. Where you can track that and really this is the piece about the weekend work, is you should be reviewing and being conscientious as to what economic data is on the horizon this week that may play a factor or impact your, basically the market reactions, et cetera, and more importantly, what's out there in terms of what may start to move or impact the NowCast model, right? So that gets updated just for those, again, the Macro Pro subscribers. You get the macro themes, presentation earlier this week. That deck gets updated every day inside of the morning shift. So if you're not aware of that, please make sure you go review your morning shift. The second click, I believe, there's a click here button that says click for the updated deck, and that gets updated with any. There's a number of slides in there that get updated for any of the new data that rolls in, right? So it'll get published, and those things will get updated, whether it's the GDP year-over-year projections, Q over Q, the NowCast model itself, and some of the those components. So again, just want to kind of reiterate that that does get updated regularly, and really one of my best practices is once that morning shift comes out, clicking that link and opening that up into a new tab and running through a number of those slides to see what changed on a kind of day-over-day basis in terms of the new data that's come out. One other way that you can kind of track that, again, if you're not a Macro Pro subscriber, I have pulled up tradingeconomics.com, their calendar. Investing.com has a calendar. TradingView has a economic calendar. I mean, these economic calendars live all over the place. So whatever you use, I think it's just really important. What I've done here today is I just kind of screenshotted some of the components in terms of, again, this was just the most impactful according to Trading Economics, but again, just Tuesday is the core inflation, so this is going to impact your inflation numbers there, and then you got retail sales on Wednesday, right? So retail sales. And then PPI as well. So the list was too long to include all the other stuff. I listed them off for you, industrial production, that kind of thing. But again, this is stuff that you should be writing down when they come out. So Tuesday, right? Tuesday CPI, you should write that down in your notebook or wherever you keep track of it. And again, this is they kind of deliver the information for you. So it's previous consensus forecasts. So kind of lays it out for you. Again, just kind of being conscientious of what those numbers are, where they are, and then the actual, whether this is down, up, etc. Right? So just again, these are just things to be aware of. Don't put too much weight on it, right? But it is data. We do care about data, and then we care about what the data number is, how that impacts the NowCast model, and then conversely how the market is reaction. So you got to play the game that you're in, the game that's in front of you, and the game that the market cares about.